Hello, Oracles. Today we're going to go over a recap of what we discussed in the live stream yesterday, just in case you don't want to sit through the full hour plus live stream. We're going to discuss how we closed yesterday, Tesla pulling back, CPI, PPI, inflation data, and we're also going to get into some new stuff like where we're at pre-market trading today. And I'm going to be getting to earnings later today on the live stream. Live stream later today will be a little bit earlier. My son has a soccer game, so that will be at 3:30 p.m. Eastern time for this afternoon's live stream. So we'll get into all of that in just a minute. All right, so looking at the charts from last night, again, we closed yesterday down about 1.75% to 269.61. Intraday, we did fill that gap down to 265.10. So that gap has now been filled. So in talking with Gort, the questions are, is this just a gap fill and then we go up from here? Or is this a gap fill and then we're going to continue on down to the next gap as well? So that I think is going to be determined this week by the inflation data that we are getting in. And now we're going to get into all the inflation expectations. Tomorrow we have the CPI data coming out. Thursday we have the PPI data coming out. Now the Fed does like to prefer the PCE data that comes out at the end of the month, but that's going to come out after the FOMC meeting. And then after this FOMC meeting on the 25th of July, the Fed takes a break and they do not come back until September. So the CPI and PPI are going to give us the best indication of inflation numbers ahead of this FOMC meeting to give us an indication as to whether the Fed is going to be raising rates or not. My feeling is they are going to be going up 25 basis points here in July. That could spook the market to have us pull down. So while we do have Tesla earnings coming out next week on the 19th, it might be enough to kind of spook the market, and whatever we get for earnings might not actually make a difference. We saw not only Tesla pull back yesterday, but a lot of the larger mega cap companies, the big tech companies, Microsoft, Apple, all of those companies did pull back as well. They've been on quite a bit of a nice run, so it might be some profit taking, but it may also be a little leading indicator as to, hey, we're going to be getting to some rough times ahead. Maybe it's time to take some money off the table and leave it as cash to wait to see what's going to happen. But anyway, we'll get into the CPI and PPI right now. So looking at the CPI forecast for tomorrow, we are looking at a significant drop yet again. So now these numbers are based upon last year's numbers, and last year's numbers were very high. But last year in July was that first signal that we started to come down. So we have been on a 12-month downward trend, and that's very nice to see, which means we are moving in the right direction. So year over year is still good to look at, but month over month is more important as of these times right now. So looking at the forecast, we are looking at a 3.1% reading coming in for tomorrow. Last month, we had a 4.0 with a forecast of 4.1. So now the questions are we actually going to meet this forecast? Are we going to beat it? Or are we going to fall short and be above 3.1? So that could be one of the indicators that lets us know what the Fed is going to be doing for the rate hikes. And we'll get into month over month in a minute, but the core CPI is also important to look at because this is what the Fed says they can control. So while the actual CPI, the headline number, is dropping down to 3.1%, the core inflation has been sticky. We've been slowly, very slowly trickling down. Last month we forecast at 5.3, we came in at 5.3. This month, we're forecast at 5.0. If we meet that, again, the Fed, I think, wants to keep interest rates above the core inflation number. And right now, we're right basically at it. So they would need to go up a little bit more to continue pushing these numbers down. So this is kind of where the disconnect comes in because the regular CPI and the headline number is coming down significantly, but core is not. So if they continue to raise interest rates to force core to come down, but the headline number is coming down significantly more due to these interest rates, that could lead to the deflationary pressures that Elon has been talking about. And so now looking at the month over month number, we are looking at a forecast of 0.3%. Last month we came in at a 0.1%. So the 0.3% is right at the higher end of the range. They want to keep it between 0.1 and 0.3%. So overall, it's not bad, but they don't want to see it trending up too high. It usually fluctuates, so this is nothing out of the ordinary. but you kind of want to make sure that this is going to be the highest it goes. So if we do end up coming in higher than that, that could lead to some concern. And we've also heard from several Fed members that they are expecting more rate hikes going on this year. And so now on Thursday, we're going to get the PPI, that is the producer price index. This is what a lot of the retailers are purchasing, what that is the cost of goods sold. So this is not what consumers pay. This is what all of the retailers and other sellers are paying for them themselves. So the forecast here does come down significantly as well. Last month, we had a forecast of 1.5 and came down at a 1.1, and we're forecast at a 0.4. So that is very low. So again, if we continue to trend in this direction, that could be those deflationary pressures where the costs of goods are coming down. When you see numbers like that happening, that could be leading to a negative GDP. Negative GDP means recession. So these are numbers just to pay attention to as we're trending, and we've been trending in that direction significantly. And again, looking at it from a core perspective, this is the core PPI number here. And last month we were forecast at 2.9, came in at 2.8. This month is forecast at 2.7, so definitely still trickling down in the right direction. But this number is still higher than the headline number, which means that if the Fed is looking to continue to push this number down even more, they are going to have to raise interest rates, which will in turn make the headline number go even lower, potentially into the negative. So these, again, are just the things we need to pay attention to as we trend in this direction, because that could be another one of those signals about these dominoes starting to fall, causing some major turmoil in the markets over the next 6 to 12 months. And so jumping back into the charts, looking at pre-market right now, we're basically flat, 269.35. Again, we've been sort of starting this little bit of a downtrend here. So is it really going to be a downtrend? Are we going to be bouncing back up and continuing on this upward trend that we clearly have been on? I will be working on getting all of my trend lines back in here. I lost most of them when I updated all of this, so I need to get back into it. But looking at the RSI, pulling down under 70, so we've been cooling off or no longer overbought. And the question is, again, we've been trending from the overbought to oversold to overbought to oversold. So we hit overbought very high recently, came dipping down, pushed back up into overbought. Are we going to continue this trend going back up, or is this going to be the signal for us trending down to that oversold range and continuing that trend? And now something else to pay attention to when it's going to be coming to Tesla stock is OpenSky's tweets out, starting this week, S&P 500 companies will report Q2 earnings for the last 3 months, along with guidance of how the second half of 2023 is shaping up and their expectations for the next year, making these earnings crucial. So again, Tesla typically does better in the second half than the first half, but we have had quite a monster first half this year. Now, again, we've been seeing a lot of the big tech stocks, as we just mentioned, pulled back yesterday. Now, this could be an anticipation of the inflation data we're getting, but we've got earnings that are going to be starting for big tech next week. We've got bank earnings starting this week. So when we're starting to look at these S&P 500 companies reporting what the second half is going to look like, pay attention to their guidance. If their guidance is not going to be strong, we could see a pullback because, hey, we're expecting earnings that may not be as pretty for the second half of this year. Now, don't forget, the market usually anticipates things 6 months ahead. So if the market's looking at this and they're saying, hey, for the next 6 months, we're looking kind of ugly, they might be selling here, taking that money, putting it into bonds, keeping it as cash, whatever they can do, anticipating the market's going to be pulling back in the next 6 months, and then they'll be buying in at the end of this year when the year closes. Very similar to what we had seen at the end of last year. So again, don't know for sure what's going to happen, but pay attention to the guidance that we hear from all of these big tech earnings that are going to be coming out over the next couple of weeks. Now, going into some Tesla specific news, this is something we've been talking about. So Zhongwen 2005 tweets out, Tesla has finalized the design of its next generation mass market electric car, tentatively called the Model 2. Now we know that, we've been talking about Model 2, compact car, whatever it's going to be called, the next generation vehicle, which we anticipate is going to be coming out of Mexico. And as he points out here, Tesla may have set the Model 2 release price between $22,000 and $25,000 US dollars. Tesla's Mexican superfactory plans to produce 2 million Model 2s a year for the US market. Now, again, this is the massive game changer. This is the one that is going to be coming out and it is going to accelerate the transition to EVs. This is going to be the tipping point. Right now, yes, we can say that we are at price parity when it comes to the average price of vehicles, but realistically, Tesla does not have any vehicles in the price range that are going to compete with that giant mass market in that sub $25,000 range. We're already seeing the Model Y becoming the best selling vehicle in the world this year, not just EVs, all vehicles. We saw that last year when it came to, hey, we're anticipating it. 2022, we saw it coming. Now it's happening in 2023. Elon has already said that this next gen vehicle is going to outsell all of their entire lineup currently combined. So that is a massive number. If they're going to be producing 2 million alone out of Mexico, we know they're going to be opening up another factory in the Asia Pacific region, could be India, and then we will most likely see one coming in Europe as well. If each one of these is going to produce 2 million, that's 6 million of these per year that are going to be getting produced. Obviously, it's going to take some time to get there. We just heard yesterday that the permits have all been cleared for the Mexico factory, so they should be breaking ground very soon. My guess is we are going to see production starting in Q4 of 2024, and then we'll probably see mass production really kind of ramping up in Q1 or Q2 of 2025. Next gen platform, I'm expecting that this is going to take some time to ramp up just because they're going to have a whole lot of new things to deal with and new challenges, but it's nothing Tesla hasn't gone through before. So we're going to see some time, but once they do get a hang of it, it's going to ramp very quickly. So, with all of that coming through, that is where I think that we are going to see this Model 2 becoming the best selling vehicle in the world, eclipsing the Model Y, eclipsing any other vehicles that could be out there. And that I think is going to happen in either 2027 or 2028, depending on how quickly they can ramp this vehicle. And now, just to mention, this is not confirmed information. This is just a tweet coming out, but Zhongwen has been pretty good with information that he's come out with. So I'm going to say that take this with a grain of salt, but this is kind of right in line what we have all been talking about. So I think this is what's going to transpire, and we'll just have to pay attention and see what's going to happen. I don't think we're going to get any official announcements about this until later this year at the very earliest, most likely at some point in 2024 as the Mexican factory really starts to get built up. That's probably when we're going to be getting more information and probably an official, announcement of this vehicle, probably in Q2 of 2024. And then looking at deliveries coming out of China, Open Skies tweets out, as reported by Roland Percher, China reported 72,212 Tesla sales in June. That is the fourth best month ever, with a growth of 74% versus last month. That's the best quarter ever, with a growth of 14% quarter over quarter, and a growth of 50% year to date versus the same period last year. Year to date is 67% of last year's total already, and we're only halfway through the year. So again, this growth continues. Tesla is making a significant impact in the market, and they haven't even dropped that Model 2 vehicle yet. That is what we are looking at when it comes to significant impact and things that people are really not grasping. We haven't even talked about the Cybertruck that's going to be coming out as well. I think the Cybertruck is going to be awesome. I think it's going to make an impact, but it's not going to make that mass market impact that Model 2 is going to be making. So I think it's going to have a major impact, but when you're looking at selling to the masses, that Model 2, that is the one that's really going to be the game changer. So all of these numbers already coming in as they are. Just wait till we get to that 2025, 2026 timeframe, and we've got that Model 2 out. Just hold on to your hats, folks. It's going to get wild. Well, that's all I've got for you guys today. I hope you enjoyed the recap and all the new information we got. Again, today's live stream is going to be about 3:30 p.m. Eastern time. I originally said it was going to be 4:20, but again, my son has the soccer game. So 3:30 p.m. Eastern time, we will be doing the live stream today. We'll be able to watch market close, see how the market is anticipating what is coming up for the CPI data tomorrow. Otherwise, thank you guys all so much for watching. I appreciate all of your support. Have a great one.